Well, I'm impatient. We can get started. Um, and I think just to leave room for questions at the end here, because I think we'll probably have some questions. And we can go through things. Um, so welcome everyone. I think I see mostly folks I recognize here, but some that I don't. So nice to meet those that I don't know. For those of you that I haven't met, I'm Ben Margolis, the director here at the Maryland Energy Innovation Accelerator, as we call MIA. And from the MIA team, we also have Mike Ducker, our ecosystem uh, director, and Emily Shepard, our programs coordinator. So today we are going to cover a bunch of things. Um, but high level for those of you that again that don't know us, because this is not just the family here. We'll just give you a high level of Mia, the programming. We'll go through kind of the origin story of the Climate Technology Founders Fund, and we have I think one of the origin story himself, Wade on here. Um, and then go through a high level overview of what it is, the process we're envisioning here, um, uh, some of the review criteria, some of the basic terms and terminology. This is going to be kind of more of a investor 101. I'm going to mute. Oh, can we mute others? But if you can mute, that'd be great. And then just high level expectations here. And then I think we'll save a decent amount of chunk of time for Q&A. This should be mostly probably a discussion. Prefer it that way. Um, so I guess to start off, is there anything I'm missing? All right, well, we'll go through it. Never mind. Um, so high level, I know a lot of you have seen this before a gazillion times. I'm going to do it again. Again, I think we've got some faces that we haven't seen. So the Maryland Energy Innovation Accelerator is a program of the Maryland Clean Energy Center. We represent the early stage of innovation for the center, which does a lot of the project financing for the state. We are corporate instrumentality of the state of Maryland. What we do as part of MIA is a series of programs that all support climate technology commercialization and try to, as we say, cross the chasm or get across the valleys of death for climate technology commercialization. Um, we offer a couple of different phases of programming. Phase zero being our earliest stage, where we do pre-accelerator program that many of you may be familiar with. Our phase one is our more typical program where we do our launch pad. This is where we are pairing you with our energy executives and residents, building a team for advancement, spin out or company formation. Phase two is currently kind of in development, but that is our prototyping and manufacturing program, dedicated towards similar to our EEIR program, but focused more on design and prototyping. Phase three is what we're all here for today, the Climate Technology Founders Fund, and we will obviously be learning more and more about that today. So, quick background on the Climate Technology Founders Fund. This was originated from a bill signed, the SB 960 bill in last year's legislative session for Maryland, signed on May 9th, 2024 here. This bill really kind of firmed up the budget for MIA, as well as provided funding for the Maryland Energy Innovation Institute, MEI squared grants, as well as it set out in legislation. There is a Climate Technology Founders Fund, and the purpose of this is to invest into early stage funding for startup companies focused on qualified projects in climate technologies. There's a list of that. I can go through the list, etc. This fund is going to be administered by the center, and we are going to we have a fund oversight committee, which I'll get into the details of what that is, what that means. It's essentially an investment committee for those of you who are familiar with other funds. The other piece of this is that in legislation, we had they said, at least 40% of the funds awarded by the center shall be used for equity investments in minority, women-owned, veteran-owned businesses, startup companies. Now, there was a letter from the Attorney General stating that we cannot have a carve-out specific to this fund, but we want to try to stay as close to the intent of what legislators put forth. And so we're using that intention to make more of a preference for minority, women-owned, and veteran-owned businesses. And we'll detail kind of how we're dealing with that preference here. So, high level, I think some of you have seen this slide before, but the idea here is, again, we're looking at the phase three. This is companies that have been formed that are, ideally past that prototyping and manufacturing phase, um, and are at that point where they're raising capital to get to the next stage. That, ideally looks like a demonstration or deployment oriented activities. And again, we've got a small minority women-owned, veteran-owned business preference. And what we're doing here with this fund is investing directly into the teams. The idea here is a $50,000 to $100,000 check size with a matching requirement. So for those that are raising, you know, at least $100,000, but ideally more, we definitely have a preference for not being certainly obviously not the only check, but not a one-to-one necessarily. We can take lead, and what I mean by that, and I'll get into more details here, but basically giving you an award of saying, hey, we will invest if you raise the additional dollars to set up the match here. And we'll get into more details about what that means and so forth. But that's kind of the high level. But getting into more details, what we envision as our process here, we're going through an application process. A lot of you may have already started that. But this application process we're picturing as a two-step process. For those of you that are in our programs already, we'll receive the second the second phase. You're kind of skipping the step. Those of you not in our program already have to go through the inventor expression of interest process for an initial just kind of review. And then so there's kind of a two-phase application. MIA staff review the submissions. We will go through initial scoring and review, and then enter into due diligence for those that are ranked above a certain threshold. This is then presented to the Fund Oversight Committee, which meets on a monthly basis. And the idea here is I'd note that what is missing in this process, what's not in this process, is any explicit rejection. I think the way that I view this is, this is kind of the type of thing we want to provide feedback. We want the people to be understanding what makes this investable, what makes, this is part of the learning experience, et cetera. We want to make this as catalytic as possible, even with those that we don't invest into. And then obviously, once we do accept and go through, the approval process from the Fund Oversight Committee, we'll then go through negotiation series and either award or invest at that point once if the match is verified, et cetera. So high level, the review criteria. This is again just being kind of high level what we're looking for, et cetera, just kind of qualifications. Part of this is we've got high level business criteria and different impact criteria. We'll be looking at the leader qualifications of the leadership team, the team commitment, and now this can be investment into the company, investment of time, commitment of full time, ideally. The technology potential. This is where we're looking at the actual uniqueness of the technology, defensibility, the intellectual property, and the overall potential of the technology itself. The market and growth strategy. This is a pretty broad bucket, but this includes basically looking at the level of market engagement and traction, as well as overall potential of market, size of market, and where this approach and technology fits relative to the competition. The investability of the venture. So this is basically looking at current investor readiness. And also this is where we rank into, come to account take into account the efforts to secure funding, what the match level is, who the match is coming from, et cetera. As I mentioned, the minority women-owned, veteran-owned business preference. And here I think looking at this on a scale, I think the preference here is for minority-owned, veteran-owned, women-owned businesses to be actually certified, kind of at the highest end of that scale. Um, and at the bare minimum, we at least want diversity initiatives, things like that, to see an effort there. Um, we are looking for climate impact, and so looking to understand what the potential to reduce greenhouse gas emissions and help the state meet its goals, its climate goals, as well as a Maryland economic impact. Here's we are looking for, again, grading on a scale of ideally headquartered in Maryland, all jobs in Maryland, everything, every project going up in Maryland, um, to, I think we don't have a bare minimum, but we need to have at least office and jobs in Maryland, um, focused here. Um, I'm kind of speeding through this, I realize. Um, but I think we can also go through high level terms, what this all means and what we're actually looking at here. Um, so I think the big thing here for our investment is we're looking at likely our preference will be to use a convertible note to make the investment. And for those of you that are not familiar with what a convertible note is, there are several different terms that will be part of that. Um, Now, I don't need to get into all of these details, but I think this is something that you can look up. You can research what that means. If you're fundraising, you will already know and understand what all of the different terms and terminology is. But basically, a convertible note is a debt instrument that converts into equity. It converts at a certain time in terms of the maturity date with, after, going through a certain amount of interest, typically 8%, at a certain cap or at a discount rate to what is raised. So depending if you hit the cap or not. Um, so that's kind of the high level there. We cannot do safes. I will say that up front. Um, that is something that we've been told we cannot do. We can do priced rounds, but we will not do any lead on that for a priced round. But that is again, so if you're raising and you have a lead that wants to do a priced round, we can participate. Is what we've heard from our Attorney General. So high level expectations again, I'm absolutely rushing through this, but we can go back through it when we have questions. But I think I do want to set a level of expectations here. One, this will be competitive. Um, we expect our goal is to make 2 to 3 investments this fiscal year, which ends June 30th. That may be overly ambitious. I mean, that just putting up front, it might be one, it might be none, frankly. Um, we're working through this process for the first time. We only have around $200,000 to invest this fiscal year, being upfront with everybody there. Um, and that's going to be at the discretion of the Fund Oversight Committee. So we're going through this process the first time. We've set the bar with them in terms of what the criteria are, how we're going to be going through this process. We've kind of agreed upon the guidelines and everything like there. But at the end of the day, they are who make the ultimate decisions. So our next Fund Oversight Committee meeting is set for March 20th. We will be presenting the companies that have applied we're cutting it off on February 28th to be able to properly present the current pipeline, all the applications, and those that we've, started the diligence process, we will present at that next meeting on March 20th. So that was my absolute blitzkrieg of information. I'm glad Emily decided that we should record this because I think I absolutely blitzed through that. But we can spend a lot more time on questions now. And actually, I'm going to just stop sharing. Although actually, maybe if anybody has any questions on any specific slides, we can start there. Nailed it. All
Hey,
right.
this is Adam Quirk. I do have a quick question back on the TRL level. Could you explain a little bit more about the stage, the readiness?
That's a good question. And that is not I should have specified. That is not a hard and fast rule. Um, so that is something it's more expectation wise. I would look more at at here. Basically, we want to make sure that we're matching the right program for the right needs. So at the end of the day, we want to be catalytic. If this is, if you are facing a absolute, need here that you can't advance, um, then we want to talk through it. If it makes more sense for you to be in a earlier part of our programming, then let's have the conversation there. Because I think that's the other piece of this is, we're trying to fill all gaps within the commercialization life cycle. So I think it's about, okay, maybe you're currently developing the technology, and let's talk about our phase two programming when we're able to roll that out. Um, and or maybe it's even earlier, right? So I think like it is it's not a hard and fast rule. This is not a minimum cutoff. But it is more of a guideline of, when you're thinking about am I ready? Is this the right thing?
Great. Thank
Um,
you.
if that helps. Yeah.
Yep, very much.
All right. Got Joe next here.
Hi there. Number one, do you have other programs in place for which you're looking for applications? And if you do, can you send information out to those of us who are attending this meeting?
Sure. So the other phases of our program um on rolling admission for those that have not been through them, etc. I know that you have, so it's a little bit different. But it's on our expression of interest. It's the same application page. We can send that to you in the chat here. The other programs to be aware of are include the Maryland Clean Energy Center programs, the C3 fund. It is not something that we manage, but it is something that our teams would be eligible for. It's especially dedicated towards and looking at, project deployments. So it's once you're, past demonstration and actually have a project in place, or ready to be deployed, basically. It's a type of thing that can be used to finance, first of a kind deployments.
All right. I've got a few more questions.
Mhm.
Does it, you get points if you have the match in hand?
Yes.
Okay. If I heard you correctly, you were talking about the potential carbon capture impact. Can you discuss that a little bit more? And in my case, I'm curious whether a low cost uh, process would get points over an extremely high cost process like these machines that are capturing CO2 at a cost of $1,000 a ton.
That's fair. I think I would view that as um, potential deployment. Like these are kind of two different categories, right? So it's climate impact if, it makes sense, et cetera, versus technology potential where we factor
What
in.
is climate impact? I don't. How
So
do you measure
that's
that?
so we're using a series of tools, including the CEV, the Clean Energy Ventures group tool. I can send that to you. The Crane tool. There are a series of tools you can do to evaluate climate impact. We also ask for, as part of as part of the application to include that in your application.
Okay, and is cost a factor at all? CO2 capture cost?
Not explicitly in the impact.
So it's not considered?
I mean, it is considered as part of the technology potential, market potential, et cetera.
Okay. And if for some reason, I'm not saying this is us, but if we only need 100, excuse me, 10,000 in match as opposed to 50, are you able to invest in smaller amounts or not?
We are able to. It's not a preference. So like it's our fund mandate is fairly flexible. So like we don't have a explicit cutoff minimum. But I think our committee would be frustrated if we had, every $1,000 investment brought to them.
Well, is there amount that I'm not suggesting that we're going to apply for a lesser amount, but is 25,000 enough or not?
What we want to do is $50,000 investments.
Okay. All right. Thank you.
Esmerom is the next on my screen here.
I'm sorry, Ben, did you call on me?
Esmerom.
Oh, I'm
Sorry.
sorry.
Yeah,
Hello.
yeah. Nice to see you again, Ben. Can you hear me?
Yes.
Yeah. Thank you. My question is just very simple because I'm not familiar with like matching funds. Is it cash or can it be also translated into the time spent, uh, or is it cash that need to be matched?
This is only cash. This is not similar to grants you can do in kind. We are not accepting in kind. This is only
Mhm.
matching, X dollars that have come into the bank. Okay. And I think Jacob is next. Do you have any other questions, Esmerom?
Okay,
I'm sorry.
thank you.
Okay. And Jacob?
Hi, Ben. Thank you very much for the
No,
presentation.
thank you.
Just curious. I mean, I know, I've seen a part of this presentation. I think you guys did, just the different stages. I was wondering what type. I mean, you guys do a lot of help, with the startups at this stage. What kind of help besides the financial, is being offered by the program?
Absolutely. So again, if you're not familiar with our program, a lot of what we're doing is bringing the ecosystem to bear on startups.
Right.
Generally speaking, that means bringing in expertise, mentors, advisors, to work with all of our different startups. That's, our traditional programming.
Right. And that still exists at this stage, or is this sort of, are we saying post or this still?
Yeah, so I think it would not be as structured as the other programs, but I think we're still going to be working with these startups.
Okay.
And those that have not previously participated. I think we also, we work very closely with our alumni. We're always, once you're in our program, you're in the family.
Okay.
And I think in this case we'll be working even closer, given that we will be invested in and have, every interest to make sure there's success.
Got it. In light of the recent political changes, I mean, is this funding that is sort of locked into the state, or is this also stuff that can be clawed back to federal funding?
This funding ties back to the state. Now, having said that, it's in state law, but so is current federal funding. So it's like in this day and age, I guess there's no guarantees anymore. But we're in legislation. It's state funds. The way that you can read through the legislation, it pulls from initially it's from the Reggie funds and the CEF, which is not directly tied to tax revenues. So it's seemingly more insulated, but again.
I mean, is the source of it the IRA funding, or is this actual?
No, the source is not. We are in no way tied to any federal funds.
Okay, all right, great. Thank you very much. I appreciate it.
Mm-hmm. So I think I've got Tom next here.
Yeah, hey Ben. Can you guys hear me okay?
Yep, gotcha.
Okay. So I missed it, and you might have actually put it in some other information, but on the convertible note, when it converts, is there a percent standard, or do you negotiate that, or what ballpark are you thinking?
Yeah, so I think standard is about 20% discount.
Okay.
And so I think we'll probably have a discount and a cap negotiated.
Okay. Okay.
But,
Yeah. Okay. Cool. I think the other questions mainly got answered. It was on the climate impact standardization, but you said you have a table for that. You have like a standard for that, right? Okay.
Yeah, and these are all, still in flux. We are developing these. So, we don't have like we haven't developed our own tool or anything like that.
Right.
So,
I mean,
this is something that
yeah.
will be part of our diligence process and evaluation, basically.
Right. Yeah. No, I mean, it's kind of an issue, obviously, because, there can be different types of impact, carbon emission offset is sort of a general kind of thing, but, there can be other sort of manifestations of impact. Um,
Yeah.
and then the other thing was, oh crap. I had a question. Damn, what was it? Well, I'll have to email you. But thanks.
No worries. Yeah, we're available. You know where to reach us.
Right.
Um, and actually, for those of you that don't, we can post our emails in the chat here. Rook, if you have a question here, you can go ahead.
Hey, Ben, thanks. My question was for the matching funds. I just want some guidance on, how you feel about the matching fund coming from multiple sources, and what if one of those sources is a grant? Or can we kind of leverage grant funding that we are receiving towards, like as part of that match, if it's for the same project and development?
This is what we're looking for is investment. So the match to be 100% from investors. Part of this is risk sharing. Part of this is it is that was written in what was written in legislation to be a one-to-one match for investment dollars. Um, and so the multiple sources is no problem. Part of the design of this program, and I wish Wade were still on here, but part of the design of this was for some of the funds to be kind of at this stage, it's more of a friends and family round. So typically, it's often actual founders. That's called the Technology Founders Fund. The idea is that the founders is likely contributing a certain amount of capital as well. And so yeah, the multiple different folks is absolutely no problem. And something frankly we expect.
So definitely, like, for example, if the founder is, putting some money in, and what if, so no part of this is, because you mentioned that it has to be investment, so no part of this can be debt?
That's a good question. That would be an investment. Um,
Yeah, because like, for example, I'm in Prince George's County, and so I would possibly be leveraging FSC First. That makes, that has special programs for to support businesses like, our size in the county. And so my question would be like, I was hoping to use that in addition to funding directly from myself as a founder to satisfy. And so I was just wondering if that would be okay, because I mean it's still cash.
yeah, let me get back to you on that one.
Okay,
I frankly don't know the answer there.
thank you.
All right. Joe, do you have another question? Is your hand
Yes, I want to know, in terms of support services and collaborations, are there universities involved? And in our case, we have a specific interest in ag university or ag related university support. Is that part of the program?
it's not part of what we do as part of this program. It is, I believe I answered the earlier question. I think we'd still be connecting to the rest of the ecosystem, including programs that do things like that, like MIPS, if you're familiar with that one, the Maryland Industrial Partnerships, which is a fantastic program that does exactly that. Um, but it's not something a role that we would explicitly play as part of this.
Okay. So when you say advisors, who would be advising our companies?
So with this, it would be more the MIA staff, bringing in, occasional mentors, things like that. With the rest of our programs, the phase one program, for example, that you went through before, um, is that's where we're bringing in the energy executives and residents, and that's where we're bringing in the kind of external folks that are likely experienced in industry, and recruiting them explicitly. The thinking here is that ideally, in our phase three, you've gone through that, you've gotten you've built that team, you've gotten that expertise, and you're fundraising at this point. And so at that point, again, we still bring in network, still bring in because we still have our list of over 200 plus energy executive and residents and mentors and advisors. But it's less hands-on, which is frankly probably better for as investors. I don't know. Having been on the other side. Brooke, do you still have your hands up? Do you have another question or?
I will lower it.
Okay, no worries. Zhengsheng.
Hey, Ben. Sorry, I joined the meeting late. Do you invest in companies that's outside of Maryland?
So this is focused on Maryland with American Economic Development agenda. So it is part of our review criteria to look at what is the impact on Maryland. And so it is significantly weighted towards Maryland headquartered, Maryland jobs, Maryland. So like, yes, Maryland focused.
I see. I see. Thank you.
Anyone else?
Hey, Ben, can I just say something real quick?
Yeah, absolutely. So Mike.
Just to kind of maybe summarize, this is not a grant. This is an investment, which means the criteria and the rubrics is much more focused on commercial type activities that Ben highlighted in the criteria that we're looking at, and everything because we have such little amounts of money, probably for a pretty competitive process versus our traditional programming. All this is going to be comparative, and so even though you might feel like you're meeting some milestones, it might not be as high as some other things on the investment match or um, um, market traction or things like this. Just to let people know, and kind of make sure people have the right expectations here. We want to make sure that the companies we invest in are going to get not just a match, but they're going to get 10x matches, in the future, because this is how we're going to be, measured by the folks who give us the money. So that's kind of our responsibility, just to make sure that the companies we're investing in are very investable companies, and will get larger amounts of money, and we're just trying to help catalyze that by either leading the process or just putting in some money to show that we are confident in the company. But we just wanted to make sure that because I think we have several companies here that we've worked with, and we just want to make sure that this isn't our traditional programming and we bring in companies. This is definitely a much more competitive process that we've done in any other programming or many other grants are out there.
Mike, thank you. And Betty, we haven't heard from you. Jacob, sorry.
Sorry, Jacob. Thanks, Ben. Can you give us a quick because obviously we're all going to go apply. Can you give us a quick highlight of what's in the application process?
Yes. Sorry, I should pull up the application here. But basically the way that we view the application, it's very similar to the criteria that we laid out. So when you go through the application, you'll kind of it'll be segmented based on each section of that of the criteria. But basically looking at kind of high level company information, the 101 there, that kind of filters into the team, who you are, the technology itself, IP, a little bit more about the market, what you're going after, traction, any customers, things like that. Again, we are looking for customers and traction. I'm trying to pull it up while I ramble through it. Um,
I'll ask you a softball while you pull it up. Is it just so we know ahead of time, like, is it one of those things where you have to do it all in one fell swoop? Can we go in and complete like a section at a time? Is there a document that will show us what questions we need to write the answers for and then like paste them in?
we're doing this through Airtable, and I think it is one fell swoop.
It is
But I think you,
absolutely one fell swoop. I'm
yes,
sorry. I just had to
yeah,
mention that because I had a question about the data source and I had to ask Emily, and it's still on my desktop open, but I have a feeling when it refreshes, it's going to erase the whole application.
yeah. I would say don't refresh. I do think that you can keep it live, like it'll, it's not like things will erase, but it is one fell swoop is my understanding of unfortunately we're just using a basic Airtable form at this point.
Cool, thanks.
And yeah, getting to more to your question now. Um, so the actual form itself. So yeah, as I said, yeah, company information, high level. Yeah, again, getting into some of the actual pieces in there. If you have any certification for your business, so minority-owned, women-owned, veteran-owned business, and what that is. And then getting into, I think the other piece that we do want to look at is we mentioned all the matching and the kind of where you're at in fundraising, but then also the actual use of funds. So, making sure that you're going to hit XYZ milestone based on this use of funds and it's reasonable and it'll get you to a next fundraise or a deployment for revenue, et cetera. We do want to look at it at data rooms. So have that ready. We'll be, going through those as part of our diligence process. I mentioned team and technology already. That's fairly straightforward. Market, we do want to see high level, what the market looks like. Especially the market you're going after. What's the niche? What's the market potential, the total available, et cetera, total addressable. Impact. Here we are looking for you to go through and actually make a statement about the climate impact. So, GHG impact, et cetera. And then backup evidence for that. If you have, literally spreadsheets done before for this, that would be helpful for us. And
Just
then
cut that out of some of my other applications, so I'll be happy to put it in this one.
exactly. And then operations plans in Maryland. This gets to our Maryland impact, especially for, as you continue to grow, what do you expect, et cetera. And then we finish with basic demographic questions. Yes, and we understand if not everybody's comfortable with that, but something we have to do for keeping track for our metrics.
Awesome, thank you.
Jacob, sorry about that.
No problem. Ben, this might be sort of a esoteric question. You need more details, but sort of a company that is pivoting towards, a startup, not a startup idea, but it's very much tied to the companies, but it's pivoting into that. Does that sort of make it more eligible for this stage, or do you look at it as, okay, now you're pivoting to this? To this idea, you really are in stage one, and we have to take you all the way up. Is that something that's considered? Do you look at the established company to create more of a sort of foundation for being more eligible for this funding? Is that
It's
clear?
an interesting question. Not one we considered when we envisioned the fund. It's the type of thing that I think. It depends on what the needs are. If you envision, this pivot needing to fundraise, and if that's it, may not be as impactful as us bringing in an expert in that field and going through our phase 1 program, right? And I could see that being something where, we start with our phase one and then go and say, okay, yes, that now makes sense to invest, et cetera. But not knowing the specifics is tough to say. I can't, so I'm just thinking through our criteria, but I can imagine if you're pivoting, you may not have as much traction in that specific field, or the technology may not be as developed. But it all just depends on the specifics there.
Okay. I mean, I'm just saying, overall, would you be looking at it as something more solid because it's coming out, it's a development out of an established company, or not necessarily because you're looking at the thing itself, or
It's tough to say without
okay.
yeah.
We'll have
I
to
mean,
talk
again,
more-
I'm just thinking through
more details.
criteria where we would
Yeah,
where
I don't
things would
think any of
factor
our
into that.
startups are going to be established per se. Is my guess. I mean, at this point, we're pretty still early in the process of where we're investing. So,
And I will say this, I think that our committee has made um they have said that they're more dedicated towards things that are catalytic and would have an impact. So like if it's a more established company that has already done, raised X million dollars, then what's our $50,000 going to do? Is it going to actually have an impact?
Right.
So that is something that while it's not explicitly in our criteria, may factor into their thinking.
Got it. Okay, thanks.
Cool. How we doing? Everybody else doing well? All right. Well, again, I think we're excited about this. This is our first go around though, so please bear with us when we go through it all. Um, so I think again, setting expectations here, we're trying to get in at least a few folks, 2 to 3 investments before the end of the fiscal year. And that's our goal. It may be overly ambitious depending on, how strict our committee comes back with, what we need from a diligence perspective, et cetera. So this might be something that, um, I may come back to the same webinar in 6 months and say, but I'm hopeful about where we're at. But just timeline wise, we're get your applications in this month if you want to be reviewed in our next committee meeting. Betty, if you have any other questions there, it looks like you do.
Yeah. Just thinking about what you were just saying. What's your preference? Like, okay, I think the end of February is the deadline to get in this March review. You're definitely going to invest in at least 3 companies before Jan. You got this. What is your preference? So, and I'm thinking about this being iterative. Is it okay, or is it preferable or less preferable to apply in March? And then if it's not the perfect application, but you think there's improvement, to iterate on that, going forward, or is it that's your one shot for review?
No, this is absolutely going to be a continuous rolling process. Like it is. So as I mentioned before, in our process, generally speaking, this is going to be part of our programming going forward. Okay, hey, it's not quite there yet. This is what we heard feedback wise. This is from this, because our committee, I'm biased. I really like our committee. We've got some really good heavy hitter investors. And I think they'll provide some really good feedback, and it's applicable. This is why they would or would not make an investment, right? And so I think this will be part of it, right? Here's the feedback. Here's what we need. And so I think it will be continuous. I don't know if we'll necessarily have to reopen applications versus just kind of getting, updating information, things like that. So I think this will be continuous, and also the total fund is $1 million. This is over the course of 4 years. So we will have more next fiscal year. So this is going to be open for the next several years. So, I think this is just the beginning here.
Okay, so it sounds like apply when you're ready, and that's not the end. But don't wait 6 months if you need it to be perfect.
Yeah, exactly. I think apply when you're ready, I think is definitely a good takeaway. Because yeah, I think we will, barring any ridiculousness, we will have funding for the next 4 years. Um, and this fund could be $1 million, could get larger, honestly. I think this is the type of thing we do see as a longer term investment.
The only caveat I might put to it is just to make sure you have eyes on where you're going to get that match from. Whether that you're doing fundraising now. I mean, that's going to be one of our probably filter questions because it's part of the regulation. Is we need to kind of get a good feel of where that match is coming from if you don't have it already. So that's probably the biggest caveat I put to that.
All right. Any other questions? It looks like Jeffrey, just saw you joined here. Do you have any questions?
Hey, good to see you guys. So I'm sorry I'm joining so late. You've probably answered this already, but it sounds like there's um some leeway for when the match can arrive. It sounds like it can arrive before you actually get the funding from Mia. So can you cover that again if you're up for it? Or I can just
Yeah.
wait to listen to the recording too, if
No,
you already
absolutely,
covered there.
absolutely. So that's the type of thing we are looking for, and you'll hear the recording. We are looking for an investment. This is not, I did say it can't be a grant. Question mark from book as to whether or not it can be debt. But I think the cutoff would be in the last 12 months having raised.
Oh,
And then yeah, and that is trying to think it's what's in our guidelines there, but so you can go back to, I raised this fund, at this point, but again, an investment fund that you go back to there.
okay. Got it. That's very helpful. Thanks.
Mhm.
Um, I'm assuming you've covered the criteria, the rubric that's being used and what you're looking for companies to be at, so I can just wait to hear that in the recording.
Yeah. Here, I'll give you the quick preview so you can do a screen grab. Wait, now hold on. See if I can do this magically. I'm not showing you the right thing, am I? There's the slide. You got it? So you can review it in the recording, but basically looking at leader, team, tech, market, investability, the minority, veteran-owned, women-owned preference, climate in Maryland. I should come up with an acronym for that. Good? Okay. And yeah, and we outlined in the
Trying to come off mute. Sorry about that. And it looked like one of the things says that it's a Maryland, doesn't have to be a Maryland registered venture. That wasn't mentioned, but you have to just have operations, it sounds like. Is that accurate?
Yeah, and we'll be kind of grading on a scale. So it'll be, I think the best will be headquarter jobs in Maryland and growing Maryland and projects in Maryland and deploying everything in Maryland. And then the other end is, jobs in Maryland and single small office or whatever.
Okay,
But it'll all be all relative.
got it. Excellent. Thank you.
Cool.
Oh,
Good
well,
for
one
you.
last thing. I saw in an email, I think like 1 to 2 awardees expected this year. And then I heard you say there's going to be 4 years total of this. This sounds like the first year. Um,
Correct.
And do you have a timeline when you'll start reviewing the first applications?
Yeah, so the the next meeting of our oversight committee meeting is March 20th. We are doing a cutoff for admittance, for submissions to that meeting by the end of this month. And that will be so at the end of this month we'll go through the list, we'll rank our we'll score, we'll rank our pipeline, we'll start going through due diligence on the top ranked folks, and be presented at that next meeting.
Got it.
So but again, this is just the beginning. It is going to be competitive from a expectation standpoint. We're only looking at 2 to 3 investments here by the end of the fiscal year, and that might be ambitious. So we're excited about it, but we're trying to temper expectations slightly.
Managing expectations, of course. And is this one where you only get one chance to apply in the 4-year period, or if you don't get accepted the first time, you'll be able to apply subsequently?
No, as I said earlier, I think this is reviewing this as, almost part of programming to be able to be somewhat continuous, providing feedback, requests for information, kind of going through that process to make sure that, our teams and our companies in this state are more and more investable, and putting our money where our mouth is, in terms of, once they are, we make the investment.
I'll have to go back to recording. I just lost coverage.
Oh, no. Did I cut out?
Yeah, sorry about that.
Okay. All right. Mike, Emily, what else did we miss?
I put both Ben and my emails in the chat. So if you have any questions, I mean, again, one of our goals is to really help startups with fundraising, and so we are happy to like look at stuff beforehand. I think and it's one of our goals and objectives. So so feel free about that.
Yeah, no, just happy to pass along this recording, Jeffrey, and then if you are looking for the application, I think if you're on this Zoom, you should have my email, but definitely reach out, and I can send both the application, the recording, and just anything else that might be helpful.
Thank you.
Excellent. Well, if no one else has any more questions, I think we can give you 5 minutes back. Thank you everyone for joining and asking such great questions. Thanks all.